Good morning, traders. Welcome to our trading room. We have been doing this for a week. It's free. It was open to the public. I hope you guys enjoyed it. If you do, under this video, I want to see your comment for the week, what you thought about it, and you know what we can do. There's a lot of requests for me to do it again, continue doing it. Here's what I can do. I wouldn't continue next week, but I can promise you sometime in the future, not very far, we will do one more of this. I'll open it again for a week for you guys. What you should know about our group. If you're watching this video for the first time, and I hope this will become viral, which means you will share it, what you need to know. The group, as you see, I showed you, it's a group of very, very active traders, which means every single one in the group is an active trader. If you're not an active trader in our group for a couple months, what we do is we deactivate your account. You're not removed from the group, you're deactivated temporarily until you come back active, and then you reactivate it. You have lifetime access to this group. So you're not paying for access to the group. You're not paying for the 5 to 7 daily webinars. We do live sessions like these where we actually analyze take trades and manage them, because you can go and, if you're here for the week, you saw how we do it step by step, very detailed explanation, and you learn, right? What you would pay for if you join us is you would pay for the training course. It's a 6 weeks training course where we train you to understand how to do this like a pro, which means you can do it by yourself. Now, the method I'm using is a method that I created personally. It's different from Elliott wave. It's different from any wave theory you'd see out there. If you see anything similar to this out there, well, that's from me. That's where they learn it from, right? Because I created this. You're taking it from the guy who created it. And I can tell you, with all modesty, there's nobody doing it better than I can do it. And that is being modest, because there's no one who understands this theory better than it. I created it. That's the point. That is enough for you to understand. So you're going to be learning from the best, and you're going to be learning from the group that has an excellent amount of super traders in the group, successful traders. You're here, you would see that. Now, I don't like to ask people to be put on the spot to, show what they're doing, but if you want, we'll ask them to go and we'll ask a few traders to make another, give us 1 minute thing of what they think of the group and post it out. Honestly, I don't like doing that. I think traders are intelligent enough to make their own decisions on what I do, right? You can like me, you can hate me, look at the analysis and decide whether you want to learn that. That's the point. And we're not here to have a love relationship. We're here for you to learn something from me, whether you think what I'm doing is good enough for you or it's something that is helping you in your trading. And if it is helping in your trading, would you like to learn it? Or would you like to get my daily assistant in it? If you would like only the daily assistant, you can join the installment program. It's not a subscription program. You're not subscribing to it. The course is not for, the group is not for subscription. It's a special group and it's free. Everything in the group is absolutely free. However much we do in the group, all the one-on-one you get, all the help you get from the traders, everything you get in this group, 5 times a day, 6 times a day, 7 times, it's free. You can't afford to pay for that. You've got to be pretty rich to afford to pay for that. The only thing you're going to pay for is the course. So when we said installment, is you're paying for the course in installment, which means you cannot afford $2,500 immediately, but you can afford $500 a month, or $200 a month, or $100 a month. Or maybe sometime down the line you paid 5. We've had people who paid, actually one guy, he paid for 3 months and he just disappeared. And we're like, okay, well, you disappeared, nothing we can do about it. We sent him a message, he didn't reply. He came back 6 months after and he paid for the full course, which means the money he paid before was still there. It didn't disappear. He just came back 6 months and said, hey, can I pay the rest of the money? I was like, okay, he is in the group right now. We were surprised. I mean, Victor was like, hey, this guy reappeared. Where did he come from? We lost him for 6 months and then he came back and immediately paid for the whole thing. That is okay. We don't have a problem with that. We realize you had your own personal issues, whatever. Everybody has their own life to live. So you can definitely come back and join us. We're not, this is not a case that, oh, your money disappeared, you start back. This is not about the money so much. But hey, my time has value. I'm doing this full time for you guys. 5, 6 times a day. This is what I do. So you might as well pay for my time a little, right? I could go get a job at a bank and make some money. I could do a lot of things to make money. So I value your time. That is why I'm here 5, 6 times to help you, right? So let's don't go into that part of whether it is. This is not about selling courses. It's about selling courses. Even yesterday, one guy told me, why don't you sell the webinars separate? Why don't you break up the courses into 5, 6 and sell each one separate? Like, you know, make some newbie course, make some advanced course. It's BS. If you want to be a trader, you need to go to somewhere that will make you a pro trader, take you from the start to the bottom, from the bottom to the top, and make you a trader. You can't halfway make a trader. That's not how it's worked, right? You can't go to the football club and say, I want to be a footballer, and say, okay, we're going to train you just to be a beginner. We don't want to train you to be a pro. You start from the bottom, but then you go all the way to becoming that pro trainer, pro player if you want to be. If you want to be a trader, there's only one way you can become a trader: trade successfully. And that's what we do. We make that commitment to make you a successful trader. Not a halfway commitment. Buy 4 of my videos and you will learn to trade. You wouldn't learn to trade even if you buy all my videos. Even if I gave you all my videos free, you wouldn't learn to trade. You would probably even don't understand half of what is in the videos. You simply wouldn't be able to do it without my help. I'm just telling you, I know that. Because I've trained people for a while, and I see that traders who complete the course once, complete the course twice, still struggle. And that is understandable. That's normal. If things were that easy when we born, they will give us a set of videos, and a year after that, we'll be genius, right? It is easy, right? Give you a set of videos, and then you want to be a best tennis player, give you 20 videos, and then bingo, you can go play tennis. It doesn't happen that way. So anybody who's selling you a set of videos is just trying to get some money out of you. That's all. Our commitment is to train you to be successful. At least that's my commitment. That is what we want you to become. And we want you to be in the group of most amazing traders in the world. That is the reason why you should join the group. And there is no second group to that. There is no other group that has better traders than our group. None. We will challenge you on that anytime. I would challenge you on that anytime. That is a fact, because I don't know any other group where traders would come in, open the group themselves, and train you even if I am not there. And they can do it for a whole month. They can do it for 3 months, because they've done that already when I was sick. I don't know another group that would make that happen. And these are not paid people. These are not people who are collecting money to do that. These are people who are just members of the group themselves, qualified enough to do it, trained enough to do it. There's no other group like that in the world. Any other group, 3 people running it, those 3 people are taking the money and splitting it, and then they will run it. They don't have the people who are paying, who are members of the group running the group for them. They're too scared to do that. They are too scared to allow anybody else to say, okay, you go run the group today, or you take over the session today. They're too scared to do that, because whatever they're doing is not giving them enough confidence that, hey, you know what, let everybody do this. So if you want to join my group, it's because of the amazing people. If you want to learn to trade, you can buy the course. You will get access to the group for life. I hope that explains everything. I'm not good at doing this. So let's move on to what we're good at doing, what I'm the best at doing, analysis. And let's move on to that. Let's start. We're recording. We'll start with the trades as usual, the trade setups we looked at yesterday, what setup we had, what we were looking for, what happens to it. And then we will go to all the other charts and we'll talk about it, right? So we were looking for a sell setup on gold. It wasn't there as yet, but it was starting to form. And remember what I said to you, that this will go up. This will go up. When it breaks the top, we'll put an entry to sell here. So we will put that entry to sell. And this might be the only one today I'm going to go into so much details to explain to you this piece, because this is what will make you understand how to look at wave analysis. Now, because we think that this could come up to the top here and drop, doesn't mean it's going to do that, right? But here's the thing. If it does that, do you want the trade? If it drops like this, do you want that trade? And if yes, you put the entry order. If no, well, don't put it. That's simple, right? What else can happen to this chart at this point? It could easily continue going up. This could easily continue going up. Do you want this trade to the upside? If yes, put a buy. For us, no. Because we understand what's going to happen next after that. And we understand that if this continues to go up like this, eventually it's going to come back here. Now we want the buy setup from here. If we get a setup from here, we'll take it. It's a difference of taking this setup and taking that setup. See how complex it is? And that is why you need training to do this. Because if you're buying here hoping that this is going to go, and then you're 10 pips up and you're like, oh my God, yep, it's going my way. Don't worry, that guy got this one, it does this. And then you watch it do this and you're like, oh my God, I just lost that trade. Why did it do that? It was going up so nice. That's because you don't understand how the pattern could develop. You have not studied 1,000, 1,000,000 of them to understand how it could develop. You're not seeing the development of that pattern as clear as we do. We train you to do that. So now, is it a buy? Well, if you have the skill level, you can do it in a lower time frame and get the hell out of it really quick, which means by the time you get in, you're getting out there already, because that looks more like a consolidation. Can it actually still go like this? Maybe. We don't trade the maybes, right? There's probably a 20% chance it can do that. We are trading the 80%. So if it goes without you. You're not in the trade. You don't have to worry about that. Traders like to worry about things that, oh my God, I wish I was in that trade. There's so much things you wish you were that you missed already in life, right? There are many, many things you should have done in life that you missed. You missed it a long time ago. So don't worry about what you missed in life. You're going to still miss a lot of things in life. You're always going to miss a lot of things in life. So don't worry about what you missed. Worry about what you have in front of you and what would you do with that. And when it comes to your way, what do you do with it? That's what you worry about. When you're in a trade, not the trades you're not in. What you're not in, not your problem. Let it go without you. You'll look for another one. If you take 5 trades for the day, one of them will probably tag you. That's the one you worry about, not the other 4s you're not. The other 4 you're not in. Your idea is to protect your capital. So once you get tagged, you go into protection mode. How do I manage this trade? The trade management becomes the #1 most important thing for you at that point in time. See, if you work like that, you will pretty much be successful. So let's go. We're putting this entry order in. So that means I'll change it from a possible sell to a sell, because we've just put the entry order. So pink means we're looking for a setup. Red means we're in a sell. We have an entry, not we're in a sell, we have an entry. Euro. Yep, see, this is what I'm saying. We have this entry order because we saw this and we said this could possibly drop. If it drops, we want to trade. If it go up, not interested, because we still have this. At some point, this was going to come back here and then go, making a running flat. See, when you break the tops and you have only one single impulse, there's a chance they will come back and then go. So this one didn't break the top, but I can probably find a running flat and show you here. Shouldn't take me very long to find a running flat. Those are regular flats. This is a regular one. Here is a running flat. You got to move up. This came, it broke the low. See, we broke the low. We kind of look like we're consolidating, but look what happens. Boom. And then it comes down. So if you sold here and you didn't close the trade, right? If you sold here and you didn't close the trade there, you're actually looking at a loss almost, right? Or you're at least panicking while this is going up, and you would close the trade because, you know, in your panic mode, you will definitely click, oh my God, and then watch it drop. So the same thing here. Can you buy this small correction? There's a small one here. There's a small one here. Can you buy that? If you have the skill level to come out in 10 pips, this would probably go up more. It could actually make a bigger correction and go up more. It could actually make a bigger correction and go up more. Once we get a bigger correction, we'll buy it. Because a bigger correction means the impulse will be this size. This one, it could only break the top and come back. And if it breaks the top and come back, then I don't want the trade. So, but here is another thing you can do. And you might want to remember this because this is going to be important for you. If I see a buy on the euro, but I don't like this pattern, what should I do? There are only 2 things I can do. And this is where knowledge comes in trading. You have euro and you have USD. This is moving because one out of 2 things is getting stronger, right? Or one is getting weaker, right? So it's either euro is getting stronger or dollar is getting weaker. All I have to do as a trader is go find out which one it is. If dollar is getting weaker, all the dollar pairs are going to go up. So I have to go to the dollar, find a dollar pair that has a better pattern, and put my money in that one rather than putting my money in this one. So you can go through all the dollar pairs. Here is one we have a buy in, right? And okay, this is a buy setup. Yeah, I like this. So if it's going to be dollar weakness, I'd rather be in this trade rather than the euro, because this has a higher probability of going up. What if it's not a dollar weakness? Let's go back to the euro. What if it's a euro going up? Then all you have to do is go look at all the euro trades and see where you have a buy setup and put the entry order and the buy setup in the euro trade that has the probability to go. So if the euro moves, great, you still get the trade, but on a better pattern, a pattern that has a higher probability to go. And that is why we look at so much of these pairs every day. Because sometimes we see one, we don't like it, we go and we look at the other one, right? And then we said, okay, well, if it's a euro, let's look at all the other euro pair. Let's see if we get a buy the euro pair. If it's a dollar, let's find a dollar pair that has a higher probability to go with, right? So we wouldn't have to worry about it. That is pretty simple. See? So it's not catching every move and every pair, it's catching the ones that has the highest probability to go. And that makes you trade safely. And that's what we do every day. So this one, there's a buy there, but I don't like it because this could just break the top and come if it drops to the bottom here. If this drops to the bottom here today, perfect. I love this. We will be buying this from either the bottom here if we get a setup or from the top there, whichever comes first. So I don't think you will be here with us because if this drops here by the end of the day, we will be in the trade on Monday, not today. Right? Aussie, you're in the buy in the Aussie. My traders closed that trade this morning. We were in the trading room. We closed it. I can show you where we closed it. We closed it here, and we have an entry order right above the top there. See? Why we do that? We saw the consolidation. When you see a consolidation like this, and it's not going, the chances are they can do this. The chances are they can consolidate here and drop more, right? If you're in a trade like this from this point, you know, you'll make you nervous. It's coming back to your entry point and you're wondering, should I put it to break even? Should I take break even? Should I, you know what, you know the regular thing you normally do, right? I could see this coming lower because we were looking at it this morning. Could it possibly be because of this consolidation here? Could this possibly come lower here, make a running flat, and then go? Well, if it's going to do that, then great, we will buy it from here rather than getting an entry from there. But if it continues to go from here, we have an entry exactly. We closed it here. We have an entry there. The difference is a couple pips. So it's still the same trade, right? Now we will put our stop here as we had a stop here. We'll put the stop here now because we're trading this flat and not this bigger one, not this entire thing. And now you have a better trade to go. Swiss, this was an aggressive entry, take it off. The aggressive entry was if this was going to go, this piece here. If this piece here is going to take off, we want that trade. If it's not taking off and it comes here, there's a chance of two things happening, a running flat here. But if this was a contracting flat, then we're going to go back to break the top. But do we have a buy setup, right? On the 1 hour, you don't have anything. There was a possible 15 minutes buy setup. We were in the trading room. We looked at this. And well, we decided not to take it. Some traders, aggressive traders might take it in case you think this is a running flat. You have to get at the break even. It could come one more down. If this is a contracting flat here, then this one would likely go back to the top. All we have to do is wait for a flag like this or one like this. So somewhere here, this one will start to either make a flag for the buy or it's going to come back low. Can we sell it? We can, but we wouldn't, because if this is a running flat in this structure, you have 1, 2, 3, 4, 5. You're probably going to break this low, but you still have this. So at some point, you go back up for that, make this flat, and then come down. The sell would be from here. The buy would be from here. This one, if you're selling, unless you get a flag here that you can sell, so by the time it breaks the low, you can get your trade to break even. What if it drops much deeper and then come back in the future? Well, it could, but you don't know that. The risk of this thing stopping at the bottom and turning is very high. Remember this one? When we didn't sell it, look what happened. Go back up. You probably, where would you sell it? Let's say you sold it here. It came, it started to pull back. You probably take break even. And then in the best case scenario, if you're good enough to say, okay, let me click it out for break even, you will. If you're not good enough, it started to go up, you panic and you close it for a loss and then watch it drop. So, and that happens to most of you. I mean, you know that. You don't need me to explain how many times that happens to you, right? I got that information. Every time my trade goes against me and I close them and then they go my way and I don't know what the hell I'm doing and what to do. Well, it's a point of understanding all the possibilities in a pattern. Not just the one way it's going to go. This thing is not going to make an ABC or WXY for you. And this is the most thing traders get confused when they learn to trade with Elliott wave patterns. Is that, okay, here's the 1, 2, 3, 4, 5, here's an ABC, and it's going to make 1, 2, 3, and it doesn't make the 1, 2, 3, 4, 5, and everybody freak out because the chart is not making ABC and 1, 2, 3, 4, 5. Right? I'm not criticizing the labeling. I'm just saying you can't just stick to that and say that is what it's going to do. You have to look at what it's doing. We do it the other way around. We look at what it's doing and then decide what the next piece is going to be. And then when that piece happened, what else could happen? And there's sometimes 2 or 3 variations of what could happen because there are about 30-something patterns that exist. And each pattern has its own variation. A running flat has about 6 variations of how the running flat would look like. So if you don't know all of that, then you're setting yourself up for failure. If you know all of that, then you can make forecasts and say, okay, what if it's making an extended running flat? What if it's making just a common running flat? Right? And then when you look at all the variations of how extended running flat looks or common running flats look, then you said, okay, which one is possible here? And once you understand the possibilities, you wait for that confirmation and take the trade. What would be a confirmation that this is going to drop? Give me an impulse and a flag and we'll take that trade. A small flag here, and we'll take that trade down. Because by the time it breaks the low, we can get break even if it stops here and go back up. If I don't get a flag, let it drop. If it makes an impulse and a flag here, I'm absolutely buying here because this move is big. So the buy is absolutely a trade we will take. The sell as from this point, no. But if this actually goes all the way to the top here without even making a flag, hey, we will not get that, but we'll get the sell. We'll absolutely get a sell because now we will know that this is the flat we're looking at. So let's go. That's a learning moment for you there. We took off this trade, right? We're waiting for a flag to buy or a drop here to sell. We'll decide on that. CAD. You're in this trade. You should have closed this trade twice. First, you should have closed this trade somewhere in here with an entry under the low here, which you should have probably closed and put here. So this is the next entry you're in. You close that entry here and you have an entry here. Once this come down here and go back up like that, you're closing it somewhere in here because you can see that consolidation there, right? You close it, you have an entry under the low. So if you're in the trade, if you're in this trade, you would have got 2 trades already. This one would have closed somewhere in this, but not on the first move up, on the pull back here that is going to go back up. So you would have closed it here, put it here. This would have tagged you, it come down here, not on the first pullback, not on the second pull, well, on this second pullback here, you close that trade. So you close that trade and you put it here. If you're tagged in this one again, well, you probably didn't get a chance to close it. You would keep this and on the way down, you close it and put it under the low, right? But since we do that mostly in the hourly, we look for 3 hours, 3-4 hours. So this would have been 1, 2, 3. The third one is the red one, right? So you will close it somewhere in the red one, the green one go back, and then you put the entry under the low. Right, so basically we look for that 3-hour span to decide what it's doing. And that doesn't mean you close it exactly. You would look at the internal structures and make that decision. Now you can put an entry under the low there. We're still going down and there's still more space to go. So you'd have got 1 trade, 2 trade, 2 small trades, and you would take out them because we broke this low, which means when you break that low, it can go back for a much deeper consolidation, a much deeper up move. I don't think we're going to go back up because this is all. Remember, we said that could be a running flat, and now we're looking for the sells going down. So put it back here. That's a sell setup. You have 3-4 hours consolidation here. That's a good sell setup. Yen. Yesterday, we closed this trade. We closed that trade at the bottom here. The same thing. We were getting that small flat there. We close it. We put the entry under the low. It goes back to the top here. This entry comes off. This one is for this one. If that breaks and go, you're in the trade. Once it goes back to the top, you take that off. That is not the sell setup we're looking for. Now, we will look for a sell setup, but it's going to look different now. See, all of this looks like a consolidation. Take this off. Take this off. Now, this could be a separate consolidation of its own, this piece here, as long as we don't break that top. So when this comes back to the top here, if it starts to drop, we'll keep a trade here. But if this drop, it means it coming back to this low and we're in a channel, right? Let me just show you that. We're in a channel. This is the up move. This is 1, see this big flat here, 2, 3. We go back again to the top. We're making 1. We're repeating that big flat there, this big flat here. Go back to the top somewhere. It shouldn't break that top. See, we didn't break this top. It shouldn't break the top. That changes the structure. So it could come back all the way here, but then it's going to drop 1 more like this. So this is a trade we can take from the top here if we get a flag, come back here, but it's not going to go very far because if they do that, they're channeling. That's a structure of a channel, which means it will come back pretty much to the low of the channel. It will probably come here, and then you're going to drop to this level, and then you can probably either go back up or you take off like a rocket, which means we will look for a buy setup once we comes to this level. So can we sell it? We'll try to get the sell from there, which is this sell. If we get a flag somewhere here, we'll take it, if not under the low, but better to get it from here going down because you're going to put a stop here. If it breaks this stop, it's over. So this would be your risk. This would be your target. And channels like this, even if it comes back down, tend to go up. So this can stay here for a long time, but eventually this goes up. That's what it's showing you there is momentum dying out, right? All that you're seeing here is that this momentum starts to die out, and this could do this for a very long time and eventually just do that. Now, where we are expecting this to go, we're expecting this to totally fall. So when it breaks out of this, when it eventually breaks out of this, it's just going to do this, make a bigger correction here and then drop. It's not going to take off to the top. What it's showing you is that the first impulse coming down is starting to lose momentum. So you need a corrective phase in there where they're going to correct what they already moved. And at that point, drops are going to start to happen. So you're going to wait for that correction and then you're going to get a drop. This might take a whole week to happen. And then the next week you get a drop. If this is large enough, we will trade inside of it. If it is too small to trade inside, like if it's too small to give you a 50 pip trade, we will not take it. Right? So go back to the 1 hour. We're trading inside of this, which means we will definitely trade inside of the correction, right? Look for that sell. If this breaks out to the top, we don't have a buy setup here right now. This breaks here. Because if it breaks here, this is the first impulse down. It will have to come back here and then go. And this would be the start of that correction, which is very unlikely. The start of the correction would probably be with this one making a drop and this one reversing it with a sharp impulse. And most likely you're going to have a flag here rather than a deep correction to the bottom. Most times that is how you would see the corrective structure, any structure started. So I think there's a high probability of one more drop. We'll wait for that. That will probably happen today. So this sell, I'm going to take it off. That is finished. You took out the profit out of that. Now we're waiting for this next sell. It's a sell in the making. We put pink, which means my traders see that and said immediately, okay, let me keep an eye on this thing for a sell setup. You're a cat. We still want the sell. If you're tagged in this sell, close the trade. So let's say we put the entry under the low here. You should have taken it off over the night normally if you're not going to be there. But let's assume for a second, and by the time you come back, you will put it under this. But let's say you got tagged in this and you start to see it doing this. See how many hours it's doing that? Close the trade. Right? Close the trade right there. Don't worry with where your entry is, where your stop is. You can close the trade and put the entry under the low. Right? Because that thing took about 10 hours or 15 hours to get there. Your stop could be here or here. Normally, your stop should be above the impulse, which is here. That's your risk. You don't need it to go there. It's still consolidating, but you don't even need to live in the consolidation. You can just get rid of the trade and wait. We're making a bigger correction. The chances it will still drop, you put the entry under the low. You repeat the process. If this actually drops, you take the trade. If this goes back up like this, we'll probably be making a bigger correction, come back here, go back there, and then drop. So far, it's still a sell setup. Right? But you don't have to live with that. And that is the money management I was trying to show, the trade management I'm trying to teach you for the whole week. I think by now you probably got a very good idea of what we're talking about, right? So they're actually very strict rules on how we do it, but you'll get those rules when you join the group. Pound Swiss. It's still a sell setup. I don't think it's going to happen right now. Looks like we're going to take a hell of a long time to come and touch this low, but once we tag that low, here's the next thing you might ask. What if this is a slow move to actually go up, right? There's a flat in here, and I'm starting to look at it and say, well, what if this here is the flat, right? This piece. Or what if that's the running flat? So this is a 1, 2, 3. You have a 1, 2, 3 here. This is an impulse up, and this is making an impulse up. That's clear to us, right? What if this impulse up is actually going to take off? It could also drop, right? Do this. The way it looks, there's a 90% probability it's going to drop, because when we saw this one, it dropped. But sometimes you do get that very slow starting, and then this one just takes off. In that case, you allow it to take off, wait for the next correction, and now you're in the buy. You're not buying it for that little piece, you're buying it for the bigger trade, right? So we're in this one. Again, remember when we saw this, you were in that trade coming down. You were with us when we took that trade. So we're in this big pattern. So if you're going to go for a buy, you don't have to worry. You're actually talking about something like this. That's your trade. You're talking about this, getting to the top there, then making some kind of a correction and go again. Making a correction like this and then go again. That's what you're looking for, because we're going to be going all the way to the top of this entire structure, which means we're coming back to this top. So this is a big correction. This is a big correction. If this is going to go, it's going to go really high. So come back to the 1 over. Can it drop one more? There's a very, very high probability this thing is going to drop one more here and then reverse very fast, make a flag and then go. But if it's starting slow like this to the upside, and sometimes they do start slow to the upside, wait for that correction above the top, right? So it's got to prove to me that it's going up. I want this to actually make that sharp move and then make a correction here. And this is the one I start to trade up. Why? Because that's a high probability trade. This one is a high risk trade. It's not that it can't go, but it's a very high risk trade, right? You can put your entry there and the next thing you know, it tags you and start dropping crazy, right? It goes tag you exactly the top here. You put an entry above that top and this thing just do this, tag you and then drop like that, right? Like you had an entry here, just tag you and drop like that. This was a flat. We didn't buy that. Remember we said we're not buying that because we're pretty sure this thing looks correct if the drop. We're pretty sure this looks correct if the drop. Would it? Well, then if it goes up, I'm not in trade, but if it drops, we'll definitely get a trade. I don't think it's ready to drop as well. I'll probably allow it to drop here and make a flag, or either put the entry here. We have to wait to make sure we break that top. Break that top and then decide that, well, we'll put the entry here. For now, it's just tagging the top, so we'll keep the entry here. I think between here and here, we'll get a flag. And we'll take the flag for the trade to the downside. That sell remains there. Sorry. Peng Yen. This is looking really, really slow. That's looking really slow. So just like this was looking really, really slow. So, and this was really aggressive. So I'm not taking this to be any running flat. I'm taking this to be more of an expanding flat, which means somewhere here, we're going to have a flat come back here. I think this will be a flat. And the chances are we could go back up some more. Now, if we get a sell setup here, we'll take it because this is a huge one. What we want for the sell setup though is we want it to go, once you make a top like this, we want it to come back and make a flag like this flag here. And then we're going to take that trade down to the bottom here. Now, if this goes and break the top, that will give us more confidence in the trade. Right? Once we break the top, any sell setup we get, we'll take, because we're going to take the sell setup for a possible running flat here. That's the first one. And if I'm wrong about it, they just drop through the bottom. Right? If this is all the correction to drop, that's it. But I think we are going to break this top because this might turn out to be what we think it is, a contracting flat. And this is, you see how this move was slow here? Kind of pull back, but then eventually take off. I believe we might get that. Come back here and then just take off to the top before it drops. So this would be 1, 2, 3. Once it pulls back, any pullback, any sell setup will take. We're waiting for a sell setup on that. I want them to break that top first. That would be great. So I'll put the top there. It's not a buy setup. Don't mistake this for a buy setup. When you see me attach it to a top like this in my chart, that's a top we're looking for, right? Not a buy setup there. We're waiting for it to go break that top. Then we'll start looking for the sell setup. Aussie, New Zealand. It's still a sell. You see the reason we didn't sell it to the higher yesterday is because they were consolidating and they can go more. This one didn't break the top. As soon as it breaks the top, we'll put it here. You can actually put it there now. I don't think it's going to drop, but that's a sell. So if it drops suddenly, we want the trade. If it goes up, you're not buying into a structure like that. You'll wait for until it make a spike and then decide if you want to buy a flag above that top, right? Aussie CAD. You got tagged in this one. It did make a flat, turned out to be a flat. Right? This turned out to be a flat, 1, 2, 3. The entry should have been moved up to this level because this broke the top. I wasn't there when that happened, but once it break the top, you move the entry up and you would close the trade here. So in any case, we'll probably call that a break-even trade because this is a flat. See this here? This goes up there, see this flat here? That means upside. So when you see that somewhere in here, you close the trade, either a small loss or break-even, whichever you want to call it. If you put an entry, if you put this to break-even when it reaches here, good for you. That trade has to come off. It's no longer valid. It turns out to be a flat. So let's go back and look at the structure. Now that it's making a bigger flat, take off this. We can put this in place here. That means if it goes up, we want the trade, right? If this is a bigger flat, it means it could go much higher. You could keep making flags and go, right? What's a bigger picture? Which direction? It's still upside, right? It's still going up. I think we expected this to go back all the way to the top here. Remember when I told you we were expecting it to go to the top there? So that was a short-term sell. We're looking for the buy back to the top there. They're going to be deep pull back in it. So be aware of that, right? Which means, do we have a flag for a buy? Yeah, we can go. This is a 1 hour flag forming there, 4 hours, and they put an entry above the top there. So this becomes a buy. Once it breaks this top, we'll put it in the positive. We're expecting this to grow. The MACD to start following it up, right? This is Aussie CAD, that's a buy. Let's go. CADian. It still is a buy. We saw this morning in the trading room. And the plan is, should we take it? And the answer is no, because it will break the top. But once it breaks that top, the chances are it could come right back here. And it might even break down. This doesn't look like the move that it's taking off. So again, it has to take off, break out of this structure, make a flag above here, and then we'll consider the buy. Because you're putting your money at risk. That is, if they tag you there, they can drop really suddenly. Now that it's there, we can actually put this entry order here. If it's making another running flat, if this is another running flat, 1, 2, 3, come back here for a running flat like that, it would not come to this level. Stop short here, make a new high, and then drop. See? So we still think this is a flat, and this is a flat for at least one more down here. In that case, the higher probability trade for me is to the downside, and to the upside, not as yet. It's a trade. That's a trade. You can see the flag. You can see the impulse happening. It doesn't have good risk to reward. My stop has to be here, and the target is just breaking this stop. That's the target. And the chances are, if I'm not fast enough to close it, it can tag me and drop. So I'm not taking the trade. It's that simple. It can do whatever it wants to do now. Not my problem. I'm not in the trade, right? Let's go. It's still a sell, so we're just waiting for the setup. We might get it from the top. We might sell from the top. Today, if we get a sell setup on the 15 from the top, we'll take it. Swiss yen is an aggressive buy you're looking for. And actually, you have a very good buy now. It's no longer aggressive. You can take this out like this, and that is a flag of its own. So from an aggressive buy setup you're looking for, you just got a buy setup. You can change this to a buy. Should we take this buy? Yeah, this is a big flat. If they make one more impulse up, at least they're gonna, it's gonna be something like this, and then maybe come down if it's coming down, because this, even if you still have the divergence here, this is a big flat, this is a big flat, right? So after a big correction like that, at least an impulse like this is, highly probable. So you will take the high probability trade. Let's go with this. Put the entry here. You can put the entry under the, put it in a 15, right? You can put the entry above the last impulse, which would be exactly this one. If they're making a running flat, we're going to hope they don't tag us. If you put it here or you put it here, it's just only a few pips difference. Let's put it above the top. That's a little safety measure, because if this is making a running flat, you see all these sharp waves there. If they're making a running flat, they could come back to about here and drop again, right? That means they could tag you here and drag you down. Above the top, unlikely. They have to do this to take you in. And then you go for that trade, right? The stop has to be under this low, so it might be a one-to-one trade profit. But what we do when we have such a big stop is you increase your risk. If you normally put a 50 pip stop and you're putting 100 pip, you increase your risk to however much you can afford. Put it as 2 trades then probably, right? But you're not going to live with this stop. You're not going to allow it to come and take you there. There's no way we're going to let that thing go and take us out there. We'll actually have a sell before it gets to this level. So if it tags you, I don't know, if it does something like this and drop really fast, make a flag, you close the trade. What if it drops to here and then make a flag? Well, close the trade and go for the sell. Basically, that's what we're going to expect. So there's a rare chance you're going to be taken out in that. I mean, that would have to be really, really fast up and really quick down. If there's a news event that will trigger something like that, take off the entry before the news event. Natural gas. Okay, you add that sell. That sell should have been off. That is not a trade. I don't care if it goes profitable. You should take off the sell. By rule, when this correction gets to the top there, you take off any entry order you have. This is most likely a flat. And that flat is going to go up. So what you're going to do is you're going to come here and look for a buy setup. So if this goes, this becomes a buy, because we're looking at that and thinking that thing looks like a running flat to me. Right, this here looks like an expanding, sorry, my fault, expanding flat. We broke the top, we broke the bottom. I'm looking at that as a possible expanding flat. Once this go back to the top, you close it. That's a general rule. You don't keep it. It doesn't matter what happens after that. If it is going to drop, let it drop like this, make a flag here, and then you sell. Now, this is not exactly a flag. Can this become a flag for downside? Let's assume this is the top and this was a contracting flat. That's an assumption you have to make every time, right? You have an impulse here, you have a flag here. Well, they're probably going to do this and then drop. That will be your break even. See? You can put your trade to break even if they're going to drop, and we will absolutely sell it from this point going down. But if this is the expanding flat as we think, then we're coming to break that up, and that is a trade we want. You don't have to know which one it is. If this correction goes lower, that is good for us. Actually, if this thing just keeps going down like this, better yet for you, let them break that low and then go back up, and now you have a perfect sell setup. So the entry order at the top will come off once we get to the bottom, and then we'll see what happens there. Pretty easy, right? You're looking at this and you're saying, this thing is easy, right? This is so easy. I can do this. It looks easy. It always looks easy when somebody, you ever watch, I don't know, any sports and you think, darn, that thing is easy. I mean, come on, I could do that. You could kick a ball. There's no single one in this room who can't kick a ball. I don't know, but Victor, can you kick a ball, my friend? Are you still able to kick ball? That doesn't mean you put Victor in the field to play football, right? Not gonna happen, right? So basically, it looks easy when someone is doing it. It's how you were able to do it when you're alone, whether you can do that, right? So how do you analyze the chart? How do you make the decision which direction you expect it to go? And how do you look at all the possibilities in any given situation? That's what we're doing here every day. Let's go. US 30. Yep, it didn't drop. Remember, you had two options. One is going to drop. Second one, if you want to buy the aggressive one, we bought it, we close it. It didn't go. This one, we closed it here because it didn't go. If you want it still, you put an entry order above the top. Not a good idea. I don't like the idea. Actually, we can go with a sell here. And I'll put that as a very aggressive sell. Right? So an aggressive sell is this one. Yep. I think that's it. No, that's a buy. The aggressive sell is the orange. Yep, that's an aggressive sell. Let's see this one. You're not in the buy. It's actually breaking out of the structure, right? So if they're trying to go up back to the top here, which I believe they're trying to do, if they're trying to go back to the top, this one would probably make a bigger flat here. We'll get break even on the sell, but we will get that trade up. Not a small one, a bigger one. A bigger one will convince us of the upside, right? That this is trying to go back to that level. This was the low, and we're getting back to this top. If they go really fast, we're going to go out. If they go really slow, which means if this come back deep and then do this, become something like this, then we will go down again. So is it going to come back deep, or is it just going to be at the top there? It looks like a sell. We'll stay with it. I like the sell setup. Right? It's a short-term trade. That's why it's an aggressive trade. You don't know how far it's going to go, and you take the trade. Breaking out of this structure doesn't mean anything in itself. It has to have a combination of things to decide, well, now we're turning, right? So I like this one here. If you guys leave the question, I'll take all the questions at the end, don't worry. I can see some questions coming in. We'll come back to the charts as well. So make sure you're telling me charts you're asking the question on. And S&P 500, same here. We put the entry for the sell, didn't go. You can put an entry for a sell here. It's an aggressive sell, which means it's either going to be a deeper correction for upside, and we might buy this afternoon in the New York session closes for break even, or it's going to drop really fast, right? I don't know which one. Let's see, NASDAQ. The same thing here. This one is already telling us that these sells might not be very thing, because they kind of make one, they drop, they're making another one. Let's see if this drop like this start to do this. That is going to be a buy setup. But if you take the sell and they're doing this, right, they'll take hours to do that. You will get out for break even, and then we'll look for the buy. Remember, we didn't sell this because this wasn't showing us downside, it was showing us upside. But the upside was literally only to this level. So I would have been very cautious about it. Do we have a complete flat for the downside? I don't think so. I think this is way too sharp to make it a complete flat. So this might come back all the way here and then go back up if we look at that as a running flat. That makes this sell attractive, right? Because if they're going to drop like this and then go back up, we'll have 1, 2, 3. I like it. It's worth taking the aggressive trade. If it doesn't go, we'll get out for break even. Right? So you put it under the low and we wait. If this really doesn't go, then we will try to get break. If this comes back to the top, take it off. If any of these corrections come back to the top here, take it off. All three there, right? That means we're definitely waiting for them to pull back and we're buying. And we had a buy in the DAX. What happens? Perfect. See, we had this buy. You have a trade. Close the trade and put an entry above the top. Take this profit and put an entry above the top. So I'm going to leave this entry here. But once I put this entry, you close that trade and you have another entry there. It's still a buy. See how it works? Pretty simple. Now, can they come back? I think they're going to come back for this one. I think this is going to drop here, make a flat, and then go back up because this looks like a correction in the middle of this one, right? This is one of its own here, right? This is probably a smaller version here as well. And this is a bigger one. Now, we don't have a sell setup. Unlike the US 30 or the S&P 500 DAX, we don't, or NASDAQ, we don't have a sell setup here. This could make a sell setup. If it drops, if this drop lower, make a flag here, we will sell this. But as of now, there isn't any sell setup. Well, you know what to do with the cryptos. So if you watch this to the end, great, you learned something. I'm going to stop the recording. There will be a second part to it. I hope this part goes viral. So I'm expecting all of you, the 1,000+ people who watch it, to share it to another 1,000+ people so that they can watch and learn something. I think there is some educational part in this video. I mean, you can agree or don't agree with it, but you will still learn something, right? Nothing is wrong with knowing something new so that you can make a decision whether that's something new is worth looking at or not worth looking at, right? Knowledge is always, in any form, knowledge is very valuable. So I'll stop the recording. You guys, please go leave your comment. That's 6 to something comment plus all the likes and the sharing.